Welcome to Small Caps. My name is Kerry Stevenson. Delighted today to be talking with Lobo Tiggre. He is the founder of the Independent Speculator.com, investor, speculator, and someone that I recently had a chat to at the Rickroll Investor Symposium in Boca Raton, Florida. And I asked Lobo if he would have some time to come and share his knowledge and his views on what's going on in this crazy market at the moment. And on this very historic day, a very sad day, on the passing of Queen Elizabeth II after 70 years on the throne. It's kind of a sad day, but history in the making, Lobo. So thank you so much for joining me today here on Small Caps.
In proper British fashion, which I'm not, we'll have the stiff upper lip and soldier on, in memory of the Queen, not my Queen, but I got to say, as you say, history in the making, a notable end of an era kind of moment. And what can you say about a monarch who parachutes into the stadium with James Bond and has a marmalade sandwich with Paddington Bear? Hats off.
Yeah, she had a sense of humor. So hats off to her. May she rest in peace. Look, there's a lot of change in the world at the moment, not least the passing of Queen Elizabeth II, but a lot of people out there confused. So let's start off. Inflation is on everyone's lips at the moment. I'd like your take on inflation, deflation, reflation, stagflation. What flation are we in? Lobo, we're confused. And the numbers, do they lie?
I'll take it one piece at a time. One is we're in historic times, so it's not surprising in a way to be confused or for things to seem to make no sense. To quote another great British person, we've got J.R.R. Tolkien, who wrote in The Hobbit that adventures are messy, right? If you're going to go out there and do things, you're going to run off without your handkerchief and things, are going to get messy. That's the state of the world today. I mean, we have a literal war in Europe. We have an economic war, which is even more grave, which is, in fact, World War III right now. We have, there is no country in the world not touched by what really is, whatever we want to call it, an economic war. And we've got the world coming out of an almost John Galt-like shutdown with the pandemic response. Whatever you think about the pandemic, there's no argument that the shutdown had enormous impacts and is still having knock-on effects. So the world just kind of keeps taking these body blows. And I'm not a very religious person, but I can't help but notice, we've had war, we have plague, now we're having drought and flooding. It seems like famine's next. All the horsemen have been cut loose. So is it any surprise that things are, I think in wonk speak, we can say a bit wonky in economics?
Well, I guess we're in uncharted waters.
Yes. And what gets me about that is that even though the powers that be sometimes will admit that, Powell has said we're in uncharted waters, and yet he quickly whips out his chart and says, here, where we're going. I have a problem with this. So the connection here, what I'm trying to tell the audience is, yes, exactly as Kerry has said, we are in uncharted waters. Therefore, be extremely suspicious of all these guys or gals in power who say they have the chart or they know what to do. Don't beat yourself up too bad if it seems a little confusing. Do the numbers lie? No, but the politicians who give us the numbers certainly do. So to focus in on your inflation question, to me, it's just blatantly obvious. We are in a stagflationary environment. Exactly how you define the stag part can matter there. If you have weak growth and high inflation, QED, that's it. This is global stagflation. And all the more reason for our fearless leaders with their charts in uncharted water to be, looked upon with askance, because their charts don't include stagflation. That doesn't exist. Recession is the cure for inflation. And, high inflation and recession can't happen at the same time, because inflation has nothing to do with money printing. It's all about confidence, right? And in a recession, who has confidence? So I'm being a little sarcastic here. Sorry, I can't help it. But this is actually a serious remark. And it's a key takeaway, the whole conversation, Kerry. If the audience, has to run off and put the kettle off the boil, remember this one thing. Beware of anyone with a chart in uncharted waters. That's a danger sign. But for my money, I'm definitely in the stagflation camp, and more, I think we're going into a serious global recession. I don't think the United States will be immune, and I do think inflation will be persistently high. So for those people that say that, well, it's not real stagflation because it's just sort of weak growth instead of recession, I think we're going to see what those people would consider real stagflation in the months immediately ahead.
If that is the case in these uncharted waters, and we are in a recession, we're currently in, I love that, Mr. Wright. Hold that up again. Hold that cup again. That's great.
My wife has one that says, Mrs. Always Right.
I love it. Love it. Perfect. Could we, if we're in stagflation at the moment, and people, I feel like people are not really recognizing the seriousness of where we are. There is confusion. How do we manage our wealth in these times? Do we sit back and go all in cash, or do we lean in and say it's a fabulous time to get into the market because things have got a little bit cheaper?
Well, not a little bit cheaper, depending on your sector. In theory, I'm a commodities guy, all commodities, but in fact, my experience is mostly in metals and mining. And boy, are the mining stocks beat up, all out of proportion to the correction in the metals. I mean, we have a correction in the metals, but all of them, except for uranium, are at or near historic highs. I mean, even after the correction, they're still at elevated prices in most cases. And some of them, look at lithium, have truly defied gravity. And yet the mining stocks writ large, with some exceptions, they're just can't get no respect. They are the Rodney Dangerfield of the investment world. And so this isn't just a little bit of risk here or whatever. This is a serious question right now because there are bargains on the table. I mean, stocks that you can get for 50, 60, 70% off, even in some cases, of what they were just a few months ago, even though the metals are down 20%, 30%. Like this is actually normal in a way. I mean, why do we even buy these stocks? Why not just buy the metal? Well, not uranium. You don't want to stuff that under your mattress, but there are ETFs for that.
Yeah.
But the reason is because the stocks give us leverage to the metals. That's why we bother, right? If you go from being a money losing miner to being a profitable miner, that change is enormous, and it's recognized by the market. We like hockey sticks, right, in the stock charts. So, and we don't have to be all Canadian, eh? So when things turn down, the mining stocks turn down with a gusto. That's normal-ish. What is weird, though, is that things have turned down after a great big ramp up. Fundamentals remain very strong, even with all these inflation questions that we're having. If we're going into a global recession, people might say, but Lobo, in recession, commodities do poorly. Well, yes, but not to say those ill-fated words this time is different. We do have a very unique situation right now. How can I put this in an economic way for your readers, your viewers' time? Well, for one thing, we've got the green agenda, and you've got a palpable shortage of everything that goes into that, which is quite a few metals, by the way. So it's not just a feel good, don't worry, it won't be so bad kind of thing. It's important. This is a major driver. For another thing, we have had huge amounts of money printing, and okay, they've turned off the spigots for now, but all of that pig still has to go through the python, and it takes a long time. So I think it is risky to assume that recession means necessarily deflation or that commodities prices have to go down. Now, that doesn't stop the traders, not the gold bugs of the world, the diehard uranium fans, or the people. It doesn't understand the people who really have researched a sector and understand it and are long based on the fundamentals. Doesn't change their mind, but the traders on the COMEX and the LME and the people who trade these things in and out every day, they look at, recession, bad for commodities, sell. So it is, I think, no surprise that we've seen the metals drop more than I think the fundamentals justify. I also think that's premature. And if I'm right, and if you have, continuing demand, especially maybe not for all commodities, but continuing demand because of the macro trends in the world, the geopolitical trends, the new Iron Curtain, and being on the wrong side and where the mine is and all that stuff. I think we're looking at very strong fundamentals on the demand side, plus the green initiative. And then you're also looking at high inflation that still has to work its way through. And so if suddenly commodities prices remain high, or demand for metals pushes them higher, suddenly the traders will say, oh, we got it wrong. We were wrong. We bailed too soon. And they'll pile back in again with gusto. That's not a prediction. That's a guess, honestly, about a probability here. I never pretend to know the future. Like, we're talking about pulling out the chart in uncharted waters. I don't want to be that guy, right? So I'm not saying I have a chart. I'm saying I'm just looking at the realities of the world, and I'm seeing sustained high demand, even in a recessionary environment.
Right.
And I'm seeing inflation having a very positive effect on commodities prices, especially those essential to the new energy paradigm and the green agenda. And that happens to be right in my wheelhouse as a metals and mining guy. That was a long answer, Carrie. I'm not sure I really got to it. I guess what the short version is, selectively, I see opportunities. Personally, I have been holding off on buying for months because of how bad the situation looked, and have started buying again. Oh, wow. I bought 8 stocks over the last month for whatever that's worth.
You bought 8 stocks over the last month. Are you going to be continuing to buy stocks, or are you looking at it and going, I'm all in at the moment and I'll just sit back for a while?
Well, I try to never go all in, because, if that once in a lifetime opportunity comes up, you don't want to be sitting on zero cash.
Okay.
So yeah, it hasn't been a once in a lifetime opportunity. I bought a bunch of new stocks that got away from me before. I mean, we were talking about things being on sale. And so if there's something that, it's the beauty of a market correction, even a painful one, is that it's like a time machine. When everything goes on sale, you can have the price that you would have had before the discovery, or before the mine was built, or before whatever it was that the company did that added value for shareholders. I could go back and pick some really great stocks that got away from me before. And now, with the advantage of hindsight, I know that's a great stock. At the time, I wasn't sure and I missed it. Now I am sure, and I can buy it for the same price that I missed it at before. I think that's a fantastic thing. So there's some stocks like that, and there's other ones that, I average down on. And I know that, sometimes averaging down is controversial, throwing good money after bad. But the bottom line is, if you invest or speculate on something, you have a thesis, there's a basis for speculation, and it hasn't changed. The fundamentals haven't changed. If it's uranium or copper, I'm very bullish on. Nothing's really changed. And the company hasn't done anything wrong. They're still making money, or they're still, drilling off pounds in the ground, or whatever they're doing. But it's on sale for half off, or even 70% off. As I said before, that's not made up. There's some of these are like 70% off their recent peaks. Either I believe, what I've written and what I've thought about it, or I don't. And if I do, how can I, walk away from a 70% off sale on something I still believe in? So I put my money where my keyboard is there, and so I bought 8 stocks. They're not all new. It's split between ones that got away, time machine, and ones that I believe in that are just on sale.
Do you share that with your subscribers? Is that sort of when you go out and have a look at those stocks? Because I know that you have a subscriber section to Independent Speculator. Is that what you share with them, and the reasons why you buy those particular stocks?
Yes, I do. I do have 3 levels of subscription. One is free, where it's my macro view. I talk about the markets. That's weekly. And if anybody signs up for that, I promise you will not get a flood of advertisements every day. Sign up for this, that, or the other. You get that 1 email per week. That's it. There's something called My Take, which is greatly misunderstood. It's not the typical newsletter. There's no portfolio. There's no stock picks. It's really my response to people coming up to me all the time, Carrie, and saying, well, what do you think about this one? What do you think about this one? Or here's my portfolio. What do you think about these? And I can't answer those individually. The SEC would come down on me like a ton of bricks. I can publish my financial opinions, however. So My Take, it has no portfolio, but it covers almost 600 different resource stocks that people have asked me for my opinion on. And that's gone into a database, which is updated every month. So I think it's pretty unique. The goal is to become sort of the Bloomberg of mining, where
Wow.
these evaluations are not paid for by the companies. I work only for my clients. I don't know, I'm not even always right, but I work for them. I'm not for sale. So
Yeah.
if you want like an independent second opinion, my take can help you out. And then what you asked about, I'm sorry to put a sales pitch in here,
No,
but
no,
you
no,
asked
please do, because I'm
not to
curious.
not to put it at the end of the, when everybody stops listening at the end. I promise we'll get back to the subject, dear audience. So the one Carrie asked about is called the Independent Speculator. And the idea of that letter is it's my own portfolio. It's not just that I disclose that I might own some of these that I'm writing about. This is what I'm doing with my own money. And you're welcome to shadow me. You're welcome to accompany me. And I put out alerts whenever I take any action. My clients are advised before I buy or sell. And I do daily news sweeps of all the portfolio companies. If anything happens that's material, they know about it right away. So it's a very high level of service for, people who really want a lot more hands-on guidance, and they want to know what I'm doing with my own money.
Yeah, getting into your own head. Quick question on that one, if you like, the My Take one. Do you just cover North America, or do you sometimes look at Australia and the rest of the world?
You'll be delighted to know there are quite a few Aussie stocks.
Yes.
I gotta tell you, they're a pain in the patukas. The way the ASX requires Aussie companies to press release everything. We got a new water cooler. One director sold one share. I mean, it's like every day there's another press release, and we got to look at them all because we need, and the subject lines are not always very descriptive of how important this is. And you can't have a robot go by and try to decide, which headlines or which stories or material. It takes human judgment.
Yeah.
I've got a team. I've hired a team, and I've trained them over the last year to help me basically tell shit from Shinola. And the Aussie stocks give us a lot of that work. But ultimately, the team feeds everything through me. It is my take at the end of the day. It's my experience. It's my judgment. It's my name on the product. But they help me to be able to cover, because I could never cover that many companies on my own.
Absolutely. But there is, well, I guess it's a predominantly Australian audience. So I was just wanting to make sure that there were some Aussie stocks in there rather than just North America, even though we can invest in North American stocks as well. Look, let's get back. So thank you for that. I want to find out recently, his name's just escaped me and he'll kill me for this. Dollar milkshake theory. Brent Johnson.
Brent Johnson.
Sorry,
he's
Brent.
my neighbor here in Puerto Rico.
Oh, give him my best regards. Great guy. And, we spoke a couple of years ago about the dollar milkshake theory. He was right. The US dollar going up and away. Do you think there will be a time when the dollar milkshake theory reverses? Because right now everyone's talking about, and Brent Johnson's right, that sucking up of the US dollar, keeping it very strong and potentially keeping the precious metals like a beach ball under the water.
Yeah, well, we talk about historic times. I mean, euro dollar parity, and people are talking about pound dollar parity. Like, wow, didn't think we'd see that again for a long time. That talk even of that. So it's quite something. And you framed it in a good way. The reversal, the potential reversal. A lot of people, gold bugs, want to hate on Brent because, he said the dollar was going to go up and it's going to be bad for gold. Brent's not anti-gold. No. Actually, gold is a big part of the position that he recommends to his clients.
Yeah.
The dollar milkshake theory is not pro or anti-gold at all. It's just about a market dynamic that pushes the price of the dollar. And it can go into reverse. So the very same dollar milkshake theory that gold bugs want to hate, while dollars going up and putting pain on the gold market, that's a tailwind for gold when the dollar goes down, when the milkshake theory goes into reverse. And I think there's pretty good odds that will happen, not immediately, but look at the ECB. As we're talking, historic day. Not only do we have the passing of QE2, now we have Jerome Powell speaking at the Libertarian Cato Institute, and we have the ECB delivering a 75-point rate hike, and other central banks have done it, but, the ECB is the bank of negative interest rates forever, where a 25-point increase was considered major news. So for them to go with a jumbo rate hike like this, that really is historic. So here's the thing. I think just looking back over the last couple of years, we saw the US sort of leading the way in and out of the COVID lockdowns. We've seen the US lead the way into the tightening phase in response to the economic pain that caused. I think that's the way I see it. I think we'll see the US probably lead the way in easing again. When that happens, there's a good argument that the dollar milkshake theory goes into reverse. And there's another part of this is that the EU is famous for having, more unemployment benefits, a bigger safety net, right?
Yeah.
So in a way, the EU can handle a recessionary pain better than the US because it has more social safety network in, already, before all of this happened, that was already installed. They don't have to pass a new law or new appropriations. It's already there. So if the US is farther ahead in the curve, and the EU is better able to tolerate pain, you could see the ECB maintain a tighter monetary policy longer than the Fed, which would reverse the dollar milkshake theory. And by the way, if you do a correlation, or just never mind a correlation, you just pull up a graph showing gold and the euro over the last year, you'll see a high correlation between gold and the euro. I think that has to do with the dollar milkshake theory, and it has to do with both of them being alternatives to the dollar. So, a stronger euro may not be the best news for gold miners who mine in the Eurozone, but for just about everybody else, it should be good news because the recent trends say that it should be very good for the gold dollar exchange ratio. I don't like to call it the gold price because gold is money. I call it the gold dollar exchange ratio.
Just before we get into, because I want to get into gold, I'm known as that gold lady. Let's get into that in a minute. But before I do, you mentioned something just a moment ago that Jerome Powell was at the Cato Institute, and the Cato Institute is libertarian. Did they ask him the hard questions? And why was he at the Cato Institute? What's behind that? That seems a little odd.
It does, doesn't it? But the Cato Institute has been around for a while, and they are inside the Beltway, for better or for worse. For non-Americans, that means they are in the belly of the beast. They're in Washington. It seems like a foregone conclusion to most of us in the rest of the United States that anytime somebody goes inside the Beltway, there's like this Soviet era death beam that turns everybody's brains off. And they seem like normal, intelligent people until they go inside the Beltway. And then suddenly they start doing all these stupid, crazy things. Not to knock my good friends at the Cato Institute, just mentioning that the building is inside the Beltway. So here we are. They've been there for a long time. They've been having this monetary conference for 40 years. They've actually had Bernanke there before, and if I'm not mistaken, Greenspan before him.
Okay.
So it's not a first in that sense. But gee, we're in these historic times, and it seems like a libertarian think tank of all places would be the one to ask the hard questions and point out the policy errors of the Fed. Clear errors, transitory. Yeah, right. And it's going to go back to two. I'm sorry, I shouldn't laugh. This is serious. But the notion of inflation dropping back to 2% without a recession, without a major amount of pain, just strikes me as ludicrous. But anyway, so to answer your question, they did, in fact, ask the hard questions. They started with inflation. The intro was the Fed missed it. They didn't see it coming. And, we've had this inflation and transitory, what went wrong? And then they segued into money printing. And they said, how can you say that money printing doesn't matter? And Powell, I got to say, I admire his aplomb, if nothing else. His feathers completely unruffled. He was smiling. He was affable. He understood the questions. He knew about former Cato authors and things they had written on the subject. It was kind of impressive the way he dealt with these questions. But he basically said, well, I just don't agree. And I know that we'll disagree on this, but here's my view, and we move on. And as a person who sent money to the Cato Institute, I really wish they had said, wait a minute, what do you mean you disagree? This is important. Let's dig in. How can you say that money printing doesn't matter the way it used to? And they didn't. They had a series of questions. They asked them. Powell gave his answer, and there was really nothing new there. It was kind of from a market perspective, it seemed to me to be a big nothing burger. We didn't get anything new out of that. It's a shame. I don't want to diss the Cato Institute too much. I think Powell would have given the same answers to anybody. And if they had insisted, no, sir, we want to dig in on this, that's, you're incorrect. And this is why. I don't think he would have gone tit for tat for them. I think he would have said, well, that's my position.
Yeah, he would have stuck to his position. Look, it's an interesting time. It's a challenging time. What's your timeline when it comes to investing, when we've just spoken about, inflation, the genie's out of the bottle, things are going to get really interesting. What do you do? How do you make money in this crazy market?
Crazy markets. It kind of, there's not one strategy. It depends. I'm a commodities guy.
Yep.
And by the way, I never tell anybody you should be 100% into gold or uranium or whatever I like best today. My role isn't to manage your entire portfolio. And there's very smart people who can help you have some kind of diversification and balance out there. That's a bit above my pay grade. That's not my experience. I was Doug Casey's due diligence guy, right? So I'm here to help you with your metals, mining, and commodities side. Whatever you're speculating with in that end of your portfolio, that's my specialty. And I recognize there's a larger world out there. And Doug himself used to always say, ideally you have 10 different speculations going in 10 completely different areas. And that doesn't mean gold, silver, copper, it doesn't mean 10 different metals, right? It means real estate, metals, carbon credits, agriculture, whatever, 10 completely different areas would be the ideal thing. And I'm just not an expert in all those areas, but I know that this was on your mind, Carrie, and I'm sorry if I've jumped the gun on you, but it's relevant to this question you did ask, and that is diversity is very important, and there is no one strategy that's always going to be right. But in the immediate context, again, we're in uncharted waters. I don't pretend to know the future, but I look at what's in the commodity space right now. And for the near term, hands down, the highest confidence trade I have is uranium. Even though even though it's had a good year or a better year last year, but it's up now at historically high levels. It's still not up to a level that will pay to mine it. On average around the world, the incentive price for uranium mining has gone up with inflation. It was 60, maybe 65, maybe 70 now. With uranium hovering around $50, well, that's a lot better than 18. It's a lot better than 25, 30 we were a couple years ago. It's been staggering upwards for 5 years, but it's still below the cost of production. You can't say that about copper, gold, silver, lithium, anything else. This is unique. And it's necessary. There's no substitution. People talk about thorium or windmills or whatever. All of these things at best take decades. And your uranium goes into nuclear energy, which is baseload power. It's not like people decide not to go to grandma's this weekend because of the recession and they use less uranium. That's not, it's different, right? It's, you want your hospitals to have power all the time.
Yep.
So, and you've got China building scores of reactors. You've got other BRICS countries building more. You've got even the EU now putting uranium in their green taxonomy.
That's right.
And, like hell froze over, it seems Germany has extended rather than shut down the life of its last reactors, or 2 of them, I think. And that was really one of those things where, people said it would never happen. And not only that, in Germany, of course, is the leading power in Europe. It's, even though it's only a couple reactors, just that example, just the fact of it as a bellwether is very important in Europe. You've got the same thing happening in the United States. You've got California, which is now, officially, right? They have, and I don't want to go on too long about uranium, but it really is different from the other ones. Key points, still below the cost of production. Demand is just, visibly going up and up and up. Supply has been insufficient to demand for years. The price is staggering around, but it is rising. I think that, even in the near term, it's not, I wouldn't call it recession proof, but this is something that, absent a major nuclear accident, it has to go higher. So very high confidence near-term trade for me. And in fact, we talked about, what are you buying? two of the stocks that I immediately bought when I decided the risk of a near-term market crash was not so great were uranium stocks. First two stocks I bought were uranium stocks that got away from me before. Okay, so that's the near term. I'm sorry, did you want to jump in with a question?
No, go ahead, go ahead.
Okay, so near term, hands down uranium, even more than gold and silver. I love gold and silver. I'm very bullish on gold and silver. But, you know, until the dollar milkshake goes into reverse, they're looking at a headwind. Uranium doesn't have that problem. I love copper too, by the way. Whether you agree with the green agenda or not, it's something that the powers that be around the world are pushing almost unanimously around the world. It's a global mega trend. And I got to say, most of the dear people of the world support this. You know, curmudgeons who don't want to drive an electric car, you know, we're few and far between. So, you know, I'm not trying to give my blessing to Al Gore's book or anything like that. Don't accuse me of being one of those people. All I'm saying is, as a speculator, I'm looking at the facts. I'm looking at the trends in the market. And the trend for the new energy paradigm, it's not just some boneheaded idea from the World Economic Forum. It is something that most people around the world believe in, vote for, care about. You know, they're willing to buy electric cars even if they're more expensive. And, you know, this is happening.
Yeah.
So near term, why am I more bullish on uranium than copper in the near term? Well, because this recession talk, I think, is more difficult for copper in the near term than uranium. And copper can correct more without shutting down mines, or cutting off supply. So I see it as a little bit different, you know, similar in a way. Both of them have a key role to play going forward. But I would hold off on buying copper stocks. I would wait to see just how the recession shapes up. You know, do we get, you know, the Fed is promising that they're going to inflict whatever pain is necessary to get inflation down to 2%. I don't believe that for a minute, but that's what they're saying. And if they do that, your industrial metals are going to take it on the chin, including copper, even though that is looking at structural supply deficits for decades to come. You know, I'm a huge believer in the copper bull, but I'm wary in the near term.
Right. Longer term, copper and probably uranium as well, even though you're a bull now, it might have some headwinds, but on a longer term basis, it's something that you're very positive about.
Yes.
Okay.
And then in the midterm, it would be gold and silver.
Okay. And I was just about to say, we need to finish up shortly. I want to just wrap a little bit around your views on, because I know, you know, when you and I were at the Rickroll Investment Symposium in Boca Raton recently, there was a lot of talk about precious metals and gold and silver, a lot of confidence in the silver, even though it's been smashed. What would you say to people out there that are looking at gold and silver? And you said right at the beginning, it's money. That's what money is. The rest is credit. What's your take on it at the moment? It's very soft. Quite frankly, it's like in the terms of stocks, it's like someone said to me recently, it's like walking through treacle. No one cares.
Yeah, right. So the unreasonable bearish sentiment to any contrarian with experience out there is actually quite attractive. And I know people don't want to hear that. They just want to know, when is it taking off? Lobo, convince me that gold and silver are going to boom tomorrow. That's what everybody wants to hear. But what you need to hear is the truth, as best as we can get, or as close as we can get to it. And the truth is that for now, the strong dollar is a major headwind. Now, it's a curious truth about the particular context we're in now. And I need to rewind a second and say, I try to never say precious metals, because there are a lot of expensive metals that are fairly precious, but they're not monetary metals. They don't respond to the same dynamics. So I try to always say monetary metals.
Okay.
Because gold and silver have circulated as money, so has copper, but never palladium or rhodium.
Right.
And even platinum, though it's gotten a lot of that sort of sheen from the so-called precious metals, it is still an industrial metal. I'm not bullish on any of the expensive industrial metals, especially the ones that go into internal combustion engines. Their time has come and gone. And the people who say that platinum is so undervalued to gold, therefore it must go up, I think they're overlooking that times have changed. So monetary metals.
Okay.
And that's just gold and silver. I think even if we went on a new gold standard, I don't think that copper is going back into circulation to make change. I think silver bugs will be lucky if silver goes back into circulation to make change, because in this day and age, people don't even carry paper money in their wallets anymore. Everything's done electronically. Your phone, your fob, your whatever. There's no reason why gold-backed versions of that can't be done, or even are being done, and in fractions of a gram. So you actually don't need copper to make change for silver anymore. And sorry, silver bugs, you don't need silver to make change for gold anymore. Not in today's world.
Right.
That doesn't mean I don't love silver. And people, my silver bug friends call me Darth Silver because of this thesis. I'm obviously in league with Darth Vader. I'm wholly evil if I'm not saying that silver is more wonderful than gold. So, but they are both still monetary metals. The word for money in many languages is silver. I get that. And for now, at least, I was talking about silver possibly not going back into circulation in some new gold standard in the future. That's in the future. That's not where we are now. Right now, gold and silver are regarded as money. Even if central banks only hoard gold, they're still moving in tandem. And even though the gold-silver ratio has widened over the years, hadn't gone back, on a day-to-day basis, you see gold and silver move to the same economic stimuli. You see them move not just to industrial news, but to monetary news. You see them move to the Fed, to the ECB. So this isn't just Darth Silver being nice. I'm telling you that the data tells us that silver is still responding to monetary stimuli. It is still a monetary metal. For now, we'll see how long that lasts. Therefore, as a dollar bear, I am a dollar bear. I do think the Fed will pivot for all their tough talk. I think they're trying to achieve as much as they can via the jawbone as opposed to actual policy. The more they can scare markets into raising rates and the economy into contracting without raising rates, the better for them. The less they have to do. But at some point, they do have a dual mandate. And when the layoffs are coming big, when the recession starts hurting, I think that they pivot. And even if they don't, the pain will cause Congress to open up the floodgates again. And you'll have fiscal policy combating monetary policy. That's as close to a prediction as I get, Carrie. I'm not predicting the future here, but I just cannot see for the life of me politicians, our dear beloved politicians, ignoring the cries of the poor, undeserving voters. After all, we have now established that no fault of their own is sufficient reason to send people thousands of dollars in stimmy checks.
Wow. Yeah.
So recession is obviously no fault of anybody's own. What I'm saying is, I think the powers that be response to recession, even a mild recession, is more easy money. And that is obviously going to be good for gold and silver. I think you're going to see persistent high inflation. I think you're going to see a pivot. I think you're going to see the dollar take it on the chin. And if, as we were discussing earlier, the EU holds on longer, you see the dollar milkshake theory go into reverse, much to gold and silver's benefit. So if in the very near term, this hasn't happened yet, hasn't even started yet.
Right.
But in the midterm, I see this as not a prediction, but as a most probable outcome of the various ones I see.
What's midterm? Is that midterm 10 years or is midterm?
Yeah, no. Actually, maybe by the end of this year. Doug Casey always told me, if you ever say anything about what's going to happen, don't say when. But I'm trying to be useful here rather than cover my posterior. So I will be very surprised if we get far into next year without some kind of shift here. I don't think that the recessionary forces around the world can be held off or denied that long. And I don't think the US can be an island around the world. We don't export much, but we do export some. And if our customers aren't buying, that's an issue. If China, has problems, that's an issue. There's, if anything, the COVID-19 shutdowns showed us how interdependent we are. And yes, everybody's moving to, onshore supply chains and so on. That's going to take decades. It was 40, 50 years in the building. It's not going to be undone in a couple of years. So for what it's worth, it seems likely to me that we're headed for recession and the powers that be will blink.
let's wrap it all up. Lobo, investor audience out there, you have the Independent Speculator. What would you say to people in a summary of what they should be doing on this historic day of history that they should be doing to not only protect their wealth, but to grow their wealth?
Build cash. I would be willing, I put my own money. I would be willing to take bargains on the table now. There is still potential for all of this recession and kerfuffle we're talking about to cause some major market crash and things to get cheaper. But that's not necessarily the case. I mean, the powers that be could see it coming and start easing. There's an election coming up in the United States. We could have a contest, people tripping over themselves to, give more free stuff to the voters, even before there's much of a recession. So I don't regard a market crash now as a foregone conclusion. Therefore, I'm building cash. I'm willing to buy great bargains that are on the table now. I'm only going to buy something I'd be happy to buy more of if I did get a crash. And just don't drink the Kool-Aid. Be very suspicious of anybody, especially people you agree with. If somebody comes out, the great guru, I've got the chart in uncharted waters, just because you're a libertarian, he's a libertarian, beware of that chart. Or you're a Republican, he's a Republican, beware of that chart. Be very skeptical. Prime virtue in today's market. And absolutely, final point, gold and silver bugs out there. Gold and silver are not speculations for me. They're not even investments. They are savings. I don't buy gold because it's on sale, because I think it's going up. I buy it because it is gold. And if all else fails, I can liquidate it in time of need. This has happened to me in my life. I have experience with this. For speculating, it's the stocks. But for bullion in my direct physical control, that's safety, that's insurance. Don't worry about any of this stuff. If we get a sale, accumulate what you can. That's what it's for.
Lobo Tiggre, for ladies and gentlemen, you can follow Lobo on Twitter at Due Diligence Guy. I love that. Why did you come up with the handle Due Diligence Guy?
Well, half my family's from Mexico, so I can say I was the cheap Mexican knockoff Doug Casey. He's a great big guy. He's 6'2" or whatever he is. He got tired of hitting his heads in all those colonial mine tunnels. He could say, I'm a short Mexican. He could send me in to go do that instead. I'm saying this tongue in cheek, but that's what I did. Doug was quite happy to send me. Once he realized that I could tell shit from Shinola, he's quite happy to send me around the world, kick rocks on his behalf and our readers' behalf. And that's what I do now for my readers today.
Fantastic. Well, Lobo, let's get you back later in the year to see where we're at and maybe have a look at that thought process, see where we're at with inflation and the chaos.
It's good to compare notes and see how it went.
Absolutely. For now, thank you so much for joining me here on Small Caps.
Thank you, Carrie.